Let's start with the Indian currency, which has continued to trade weak on the back of dollar demand from banks and importers as well. The rupee has ended the day at around 62.41. Also according to the report, the pressure was Economic Affairs Secretary Arvind Mayram remarks that 30 to 40% of the state-run oil companies' dollar demand had returned to the open markets. Let's get in a word from the experts on the currency movement on the road forward.
I think the rupee volatility is a great cause of worry because it brings mark-to-market risks onto balance sheets. It creates fears in terms of both the import side, and many companies have large import content.
I think the currency has reflected the dollar strength and is continuing to show that. It's not a kind of panic situation at all because the CAD has improved substantially. Your monthly trade deficit is probably giving in monthly savings of at least $10 billion compared to what it was in July and August. So it's not panic, but I think the current move that you're seeing, 62.50, even probably 63 also, it's more kind of, importers trying to buy out. Maybe a little bit of the oil demand already coming into the market.
Well, so that's the view really coming in from experts as well on the Indian rupee. But also let's get on board Vijay Bambani, who's author and CEO at BSPL India. Also joining us is Vikram Murarka, who's Chief Currency Strategist at Kshitij Consultancy. Vikram, hi. Let's start with you first. What's your sense really coming in from as the oil marketing companies return back into the market, to the open market rather? 30 to 40% of demand is back. How would you see that impacting the currency now?
Clearly, dollar rupee is getting into an uptrend now. If we look at the charts, we've got this huge rounding bottom that we've seen throughout through October, and going forward, there should be chances of dollar rupee going up towards 64. In the immediate scenario, maybe we'll see a bit of consolidation between 62 2030 on the downside and 62.70 on the upside, near the high that we saw today. But eventually, maybe we're heading up towards 64.
Vijay, getting you on board as well. What's your sense coming in for the currency now? On one side, the OMC's demand is slowly getting back into the markets. On the other side, though, there have been reports of perhaps a central bank intervention into the market because the rupee has come back from 60 to 70 kind of levels to give a closing at 62.40 odd.
Manisha, it's been almost 3 weeks now that I've been talking about a technical correction in the dollar ending and the dollar heading towards 63.5, 64 levels. Now, whatever reasons one needs to assign for the strength in the dollar is besides the point, but technically speaking, I think the dollar was oversold, and at the sub-61 levels, it was a prime pick. I think what is likely to happen is that you are likely to see a bear squeeze where traders who had gone short on the dollar betting on further rupee appreciation are likely to be caught on the wrong foot. There would be a clamoring of short covering, which will lead to a sizable rally with velocity in the USD INR. I think 63.5, 64 is a point which I would watch out for. I'm not betting that the 64 levels would be a halt on the upside. There is a possibility that there would be more strength and the dollar would have legs to basically rally even further if possible. But this is the bare minimum that I'm betting on the dollar to rally.
It wasn't just the OMCs coming back into the market. It also has to do with the kind of S&P statement that we heard in the markets today. They have stayed on with their negative outlook on the India ratings. Vikram, what's your sense do you get from that? Because the finance ministry, though, has said that doesn't really mean much. But having said that, it does bother the sentiment.
True. The rating agencies have made noises about India today. They've been making noises about Brazil over the last couple of days, and we're seeing the Brazilian real weaken, and that is getting reflected also, I think, in strength of the dollar against emerging market currencies, including the rupee. So that's just another of the factors which would support a rise in dollar rupee. We can list several other factors, but as Vijay said, all of those are actually not really so crucial. The important thing is that on the charts we are pretty clear that dollar rupee is headed up.
Vikram, the bothering point that we saw in the month of July and August were high CAD, which seems to have been contained at this point in time. It also was about the high crude oil prices, which have come down. The gold imports also have been contained to a certain sense. So would you say that all the positives perhaps have happened? That's the reason we are looking at some kind of a bottoming on prices?
The CAD has definitely been a very positive turnaround. But there has been talk that maybe the RBI was building reserves in the 62-61 region, so that may have put a bottom to the dollar rupee market. A very important thing which does not really make headlines most of the time is that we're continuing to see outflows on the debt market front from FIIs. We've got positive inflows on the equities, but we've got outflows on debt, and we've got the GOI yield moving up further. We've gone up to 8.86, and maybe we move further up. So that is a negative for the rupee, and if we've got the OMC demand coming back into the market, that's a negative for the rupee, which will counteract the positive of the CAD that we've got so far.